Can a simple price action concept change your overall trading? And that answer, my friend, is yes. Today, I'm going to be talking about a trading concept that transformed my trading, that took me from a beginner trader to a point where I started to actually get some reward from trading. And even after I had gone through the process of going full-time trading, it really amplified my understanding of the market, how the market worked. And that concept is simple. It is the concept of buyers and sellers. When I first started trading, guys, I couldn't believe the overwhelming aspect of trying to figure out where is price going to go. And for a lot of you guys watching, that is the biggest thing, because if you can figure out where price is going to go, guess what? You're going to be making a lot of money. And that's just simply the game. And unfortunately, there's so many things that we can use to try to figure this out. But the easiest and the simplest thing is understanding the foundations and the fundamental aspects of buyers and sellers from a price action technical standpoint. In today's video, that's what I'm going to be going into. Let's get right into it though. Understanding buyers and sellers, guys, is a pretty important aspect to trading, because when buyers are in the market and you have less sellers, price is likely going to go up. And when sellers are in control, or they're more sellers than buyers, price is likely to go down. But what that means in the deep level is that you want to be in line with the institutions, right? With the banks, because those are the ones that are really pouring the liquidity. And as a retail trader, the reason why this concept is important to your trading is because we don't have the pool or the capital, the resources, the ability to move the market. So our job is to get behind the institutions and the people who do, the groups of people who do. And I'm going to be going over in 3 steps, essentially how you can identify who is in control, so you can go over to the lower time frame and execute your trade. First thing is, you want to identify the trend. If we are moving up, it means that we are in a buyer's market. And if we are moving down, it means that we are in a seller's market. Taking a look at this example on gold on the daily time frame, what we see here is that gold is currently trending lower. And instant, right off the bat, you know that we are in a seller's market. Simple. Step number 2 is to focus on the little detail, like the market structure, because when sellers are in control, they are doing something pretty instinctive, and when buyers are in control, they're doing the same thing. And what they're currently doing is they are seeking liquidity that is rightfully theirs. When I say liquidity, I mean that when buyers are in control, they're targeting the liquidity above the highs, right? And when sellers are in control, they're doing the exact same thing, but opposite, right? So right there, right, buyers are in control, the highs are being targeted. These are areas of liquidity. These are objectives that are being filled. And when sellers are in control, they are targeting the lows, right? The lows are being taken out. So it's important as a trader that when you are looking to execute your trades, you understand this, because your objectives might not be fulfilled if you are on the wrong side of the market, right? If you're buying in a seller's market and you are selling in a buyer's market. So taking a look at this, we can see that pretty clearly right now. If we go over to the charts, we can see the exact same thing. As price starts to make lower lows and lower highs, in this example here on the daily time frame, we can see that sellers start to come into the market and they start to continue moving lower. So once you start to make this realization, once you understand the market structure, you start to focus on the highs, because okay, if the highs get taken out, you know that there's a strong possibility that buyers are likely going to be coming into the market, because those are not characteristics of a seller's market, right? Sellers, they focus on the lows. So here your focus becomes, okay, if this is the current move that we've just seen here, let's say this is the current move, this is where price currently is right now, and we know that on the daily time frame, even though we're getting some temporary pullback, you're still focused on this level. If this level gets tested, which it did, and it failed, right? We know that this is still an area of interest because that's what happens in a seller's market, even when you're getting a temporary pullback. And a lot of traders like to take trades in the opposite direction on the daily time frame. You could, because hey, it's there's a lot of opportunities here, because this is a pretty strong move for a couple of weeks. You could be on the right side of the market, and that's the one thing I want you to understand, because on the smaller time frame this is a buyer's market. On the larger time frame this is a pullback, right? So being able to understand this on the daily time frame will give you the understanding as to like how aggressive should you be when you have a trade on the 1 hour time frame and you're approaching a pretty significant high, right? And you know that you're in the seller's market, so you know that there's a strong possibility that that high is going to be holding, not just from a resistance or support standpoint, but the high, because those are the areas of liquidity that buyers like to target. But if we're in the seller's market, it's going to be holding. So your focus now becomes this level of liquidity, right? The lows. And as you can see here, sellers start to look towards targeting that, and profits are being made. And one of the things that you're also going to start to realize as you start to back test this, or you look at your charts and you just look at just pay attention to it. When an area of liquidity is tapped, we're likely going to get a pullback later. And we saw that here as price took out this low, boom, we pushed back up. Same thing here after price moved down a little further down, and then we started to see price pull back. So it gives you an understanding of the objective is complete. Maybe I should wait for a pullback now, because there's a strong chance that sellers have completed the objective in the meantime, and we're going to get some temporary buyers, which we are likely going to see at some point in time. And that's kind of like what we're seeing. We saw a little pullback here. So the other thing that you want to also focus on is the candlestick. And I like to say candlesticks don't lie. Candles don't lie, guys. In a seller's market, what you're going to notice is if you're not looking at trend, if you're not looking at the market structure and all of those things you should be paying attention to. But if maybe that's not clear and you want to figure out another way to identify who is in control of the market, or another way to follow the money, as I like to say, is to understand the volatility of the candlestick and the strength of the candlestick. Because in the seller's market, you're always going to see bigger candlesticks than the buyers, right? Because that's where the money is coming from, because we are in the seller's market. And if you can take a look at these examples here, you can see that the candlesticks are massive, right? So for example, it took 1, 2, 3, 4, 5, 6, 7, right? 7 bullish candlesticks for price to get up here. And it took 1, 2, 3 for price to essentially cover like half this move. So that right there tells you, hey, this is a seller's market. And maybe you haven't executed a trade yet, right? And you're thinking about it, and you see 1, 2, 3, right? That just tells you right there, these 3 candlesticks are bigger than any other candlestick that you've seen in the last couple of days, last couple of weeks. And it tells you that, hey, there's a strong possibility that liquidity is flowing down, right? The institutional flow is to the downside. Capital is being poured into the market and it's going lower. Sellers are coming in. Even though you're going to see a pullback, maybe temporarily, you know that more sellers are still going to be coming in. So candles is one way that you can identify the concept of buyers and sellers, in addition to paying attention to the market structure and the overall trend. And that's the video, guys. Thank you for watching. I wanted to introduce you into the concept of buyers and sellers and how you can use that to identify who is in control at any point in time by identifying the trend, focusing on market structure, and paying attention to the candlestick. So those 3 concepts, those 3 steps are going to help you get there. Once again, thank you for watching. Hope you found this video insightful. Don't forget to like and subscribe, and see you on the next video. Cheers.